Bull traps. In today's video, if you're a trader or you're even holding any crypto or you're using trading robots, I want to try and help you to protect yourself against getting caught in a bull trap. What's a bull trap? Well, you start to earn loads of profit and you think everything's great, you reinvest, only for a massive pullback and you get wiped out, all your profit, and you're looking at the screen scratching your head thinking, what did I do wrong? So in today's video I'm going to cover that so I can try and help you not get caught into a bull trap. Let's head over to my laptop and I'll show you what I'm talking about. So what is a bull trap? Well, just look at some of these tokens on the screen here. They're all pumping up at the moment. And if you're trading these, whether you're doing it manually or with a trading robot, you're taking profits. It's easy to make profit in a bull market when the price is going up. But what happens when the market starts to turn? Now, you could be trading some of these coins here that are in the red. And look at this one. Dropped by 16.5%, 10.3%, 15.3% drop. And what can tend to happen is people make the profit and only to lose it all because they're not doing any risk management and they're not managing their trading, whether it be with crypto bots or whether they're trading manually. So let's take a look at this Bitcoin chart. You know, it's got its nice sweeps down and sweeps up. Great places for you to make profit and for a trading robot to trade nicely. But then the market pumps up and you go right up to 103,000. You make some nice profits again because you're buying down the bottom here and you're selling at the top. And then what happens is you have this flash crash where the price of Bitcoin drops from 104,000 all the way down to 91,000. And a lot of people will panic in this situation and they'll sell down here and say, it's going to keep going down and I'll get out. Trading robots, if you don't have the funds for them, can start to eat up your profits. And I want to show you how to prevent your robot or even you from eating up your profits that you've already made, because there's no point making profits if you're not taking it out, putting it in your pocket or putting it into your bank account. So I wanted to have a look at some of these robots. You look, it's 148%. It's made $148, meaning it's trading with $100 and it's made $148. This is a perfect example of being able to take out the profit. Coming down a little bit further, this one, 245%, look, 113%, 85%, 153.4%, making $153. So what do you do in these situations? Now, in my opinion, what I would want to do is to lock in that profit. And the first thing I would do is come up to this button here, click on that and set it to sell only mode. So that's going to sell any open lots that I've got. So it's locking in my profit. It's not going to buy any more if the price keeps on dropping. It's going to lock in that profit. And then what I can do is I can also go and create a new trading robot with this token, which in this case was Doge. And it doesn't matter whether I'm trading on a decentralized exchange or whether I'm doing on centralized exchanges. And it doesn't matter if I'm trading manually or using Jonny Blockchain's trading robot to do the trades for me. If I was trading manually, I'd go and take out my profit, withdraw that from the exchange, pop it into my bank account, unless, of course, you want to compound it into another robot. But I like to take my profit out. I can't live on compounds. I can't live on numbers on a screen. I want to be able to take the money out. So if I'm trading with $20, $10,000, once I've doubled my money, I want to get my principal out, get it out of the system. Then I'm trading with free money. I'm trading with just a profit. Then I can be a bit more risky if I want to. So an example here again, look, this bot here has got to 229. It's only made $45 because it's only trading with $20. But the point is, it's more than doubled the money. Same as with this bot. It's made 139%. It's great to get the principal out. Then I can start to go into the next phase where I'm going to trade with the profit. That's free money. And now I can start to be a bit more, open up more trading robots and so on. But let's get back to the Dogecoin. Now for my Dogebot, I'm going to come on these three lines here, the hamburger menu, and I'm going to open up Doge on a deck screener. So I click that. This is giving me the chart and it's showing me what the high prices and low prices have been in this time frame. So if I zoom out a little bit, So I can now see that Doge has had a good run up, but the low it's been is 0.37. So coming back to Jonny Blockchain, what I want to do is come up the top here, go to edit my bot, and then all I'm going to do is click on duplicate. So now I've got a duplication of my bot. Now make sure you come over on the left hand side and put it on infinity, because remember the previous Doge bot, put it to sell only. So it's going to close out any lots, lock in the profit. It's not going to buy any more tokens, any more Doge token if the price is dropping. And then what I'm going to do is come up to expert mode. And now coming down here, again, it doesn't matter what you're trading with, whether you're trading with $20, $10,000. What I'm about to show you is important that you don't get caught in this bull trap. Because what can happen if we come back over here, Doge's had a run up, but what it could do is drop right the way down. And if I get left hand side here and I get this price range and I take that and go down to there, there's a chance that Doge could drop down 12%. And if I zoom in a little bit more, I can see that Doge has had a big run from up here, from this high up here all the way down. Let's get that tool again and show you up here again. So I've got there 17%. There's a possible chance that Doge could drop by 17%, could drop by 30%, 50%. I don't know. But what I want to do is I don't want to get stuck in what's called a bull trap, just in case the price turns around and drops dramatically and it eats up my profit. So what would I do in Jonny Blockchain? Well, I've got all these lots on the default setting. So what I'm going to do first is I'm going to delete some of these lots off. I'm going to get rid of some. Okay, and I'm going to leave it up to about 2 or even 3 lots at the top there. So let me get rid of these. And so now I'm left with 3 lots. I've got lot 0, which is the very first buy it does. I've got lot 1 and lot 2. Now, if it carries on in a bull run, then that's great. It's going to buy this lot here. It's going to sell it at a profit. Price will drop down a little bit. It will buy another lot, sell it in a profit, and so on. That's what happens in a bull run. But what happens if the market starts to turn round and I start to lose my profit? Because if the price drops by 30, 40, or even 50% or more, if I've got the default settings, my bot's going to keep buying. Now that has its advantages as well as its disadvantages. The advantages is if you have faith in this particular token, say Doge, could be Bitcoin, it could be Ethereum, doesn't matter what the token is. But if you believe that the token in the long run is going to keep going up, the default settings are brilliant because it's going to buy you some cheap tokens if the price turns around. But if you don't have faith in the token, you think, well, I'm only trading this token because it's been on a good run lately, and I don't really want to keep this token. I only want to trade it and make some profit. Well, if that's the case, you've got to say to yourself, well, I've made $100 profit, so that means I could take my principal out. So I've got my $100 back, if that's what you were trading. Could be that you've made $20 profit, could be that you've made $1,000 profit. It's irrelevant. But once you've doubled your money, you've got your principal. That's back in your pocket, back in your bank account. Now you're trading with the profit. So if I'd made $100, I'd say, well, I don't want to risk any more than $100 because I preferably only want to risk, say, 25% of that. So I want to risk somewhere around $25 to $30. So if I look here, if I set my trades up for $10 a time, I'm only risking $30. Now, what I can do, and let's say I wanted to change this for $20, I'm only risking 52. Well, if I've made 100 and I put the principal back in my pocket, I'm only risking 52. I could still walk away with $48 in profit if this bot drops down and doesn't make any more money. So what I come to do down here is I say, okay, I wanted to buy the first lot, and let's go back to the chart and say, well, what happens if it does drop down, does have some of these pulls? If I get my price range and say, well, that it could drop down 11%. And if I get that again, there's another drop here. It's dropped. That was an 8%. Let's get another one. I can see that this is quite a biggish drop. So there's 10%. So I got 11, 8, 10. I've got one here that's 12. So why don't I come back in here and set this to minus 9, 8%. You can set what you like and say, so what I'm doing here is I'm saying, well, the market could drop down by 8%. And if it does,
my bot will buy the next lot. And I'm happy for it to do that because I'm risking my $52. But what happens if it goes down even further and it doesn't make a profit here? Well, what I'm going to do is I'm going to set this down and I'm going to go down to, say, 17%, 20%. So now my bot would buy this lot up here. If it goes down the price, if it doesn't hit and it hits this 8%, minus 8%, you know, there's a few other factors in place with pullbacks and so on. But if it hits around 8%, my bot could buy another lot. And if it drops down even further, you know, another 17%, meaning it's dropped by roughly about 25%, my bot could buy another lot down here. And then it won't buy. If it keeps on dropping, it won't buy. And if the price never ever gets back to when it bought in at this lot too, there's a few things I could do. Well, the first thing is to say, well, I'll do nothing. I'll just leave it and sit and wait. I've still got $48 in profit in my pocket, and I'm not going to spend that on any more bots. I'm going to keep that until maybe this bot recovers. The next thing I could do, well, I could take the loss, couldn't I? I could sell the tokens and really take the loss. I don't recommend that because there's no way that you're going to recover if you've sold the tokens. So you're either going to hold on to it, or what you can do is you say, well, the price actually dropped by 30%, for example. And I believe that that's the bottom. It's not going to go any further because I've watched the token. It's gone sideways for the last few weeks. And I believe that that's the bottom and it's not going to drop anymore. And then all you need to do is to say, well, I'm going to risk another $20 or $10. You know, I could put in here 50%, for example, means I'm risking another $10. So my total risk is 62. I've still got some profit in hand. And then I can say, well, I'll let the robot buy in down here. And now there's a chance that this robot, using the kept profits, I could maybe do this kept profit so it keeps a bit more for the robot and gives me a bit less. So I could drop this down to, say, 10%. That means I get 10%, 90% is kept for the robot to bring down the trades above. So there's a little idea that I think you should look at when you start to make profit, is to lock in those profits. Don't get caught in this bull trap because it's easy to make money when the price is going up. What you don't want to happen is when the price reverses and it starts to go down, that you lose all those gains that you've got. Lock in that profit. Once you double your money, it might be that you don't want to double your money. You say, well, once I've made 25%, I'm going to take out my principal and I'm going to use the 25% profit to open up bots. That way you haven't lost anything. You've got your principal back and you've got the other 25% that you've made in profit. You know, if you're trading with $100, you've got $25 to open up a bot. If you're trading with $1,000, you've got $250 to open up a bot. You may say, well, I'm going to wait until it hits to 50% or it doubles up to 100%. But there's got to be a strategy that you have in your mind before you start. Set what your limits are. Don't get greedy. Say to yourself, well, what I want to do is I want to make double my money or I want to triple my money before I take my principal out. But you must have that risk management already in place to say, this is what I'm prepared to lose. $100, $1,000, $10,000, $100,000. Doesn't matter. I'm prepared to lose that because whenever you're trading, it's very, very risky. But once you double your money, in my case, I've doubled my money. So I'm now trading with free money. I've got my principal back. It's not affected me in any way, shape or form. I'm not really bothered what happens with the market. Of course, I want it to carry on a bull run so I can make even more profit. But if it does drop down and this is the end of the bull run and everything crashes down, which I don't believe that for a minute, I've got my principal out. I've locked in some profit on some bots. So doing risk management, working out your strategy before you create your first trading robot and stick to that strategy. In my view, you can't create your own trading robot. Below this video, you're going to find a link. It's going to take you over to Jonny Blockchain. You can either use it with a MetaMask wallet and PancakeSwap, or you can set it up with Binance.com and Binance US. You've got decentralized trading or centralized trading. Your funds stay inside your wallets all the time. So if you're using the decentralized, your funds stay inside your MetaMask. If you're using the centralized on Binance, then your funds stay inside your Binance account. You don't have to send your funds to this platform to do the trading for you. You can create a free account by clicking on sign up or register. going to bring you here. Pop your name, your email address, password, put some ticks in these boxes. Click on this box here to say complete my sign up. You can have a look round, and when you're ready to get started, if you want to set up a decentralized trading robot, it's going to cost you $25 a year to set up as many trading robots as you like. If you want to set up a centralized trading robot with Binance, it's going to cost you another $25 a year, and you can set up as many robots as you like. So if you want to set up both decentralized and centralized trading robots, it's just $50 a year for as many trading robots as you like. Click the link below, come and create your free account, and happy trading.